In this video, we are going to discuss what are the disadvantages of inadequate working capital. So, if the company is maintaining working capital more than what is required, that is, if company is having excess working capital, then what happens? And if the company is having low working capital as what is required, then what will happen? So, with respect to excess working capital, there will be loss of optional investment because our fund remains idle. It is of no use, so we can invest these fund into more profitable opportunity, but we are having only idle fund in the form of working capital in our business, so there is a loss of optional investment. Then the question of obviously loss and the deficit arises because of this. The storage of inventory increases, and there may be chances of getting these inventories obsolete or damaged and misappropriate, and there are so many another risks that can be theft, that the fire can took place into the godowns or the storage houses, warehouses, and there are so many other risks if we are maintaining more amount of working capital and more amount of cash in the business. Then it also obviously reduces the rate of return because we are playing here safe and we are having excess working capital. That is the conservative policy, traditional policy of maintaining working capital. In right hand side we can see the results of inadequate working capital, that if we are going for aggressive policy, that we are having less amount of working capital as what is required, so we are maintaining low working capital. So obviously in this case the purchase will become expensive, that you cannot purchase with discount, you can, because you are having less amount, so you need to pay more. The risk on production continuity is there. If there is no inventory, no raw material, then the production cannot be continued, so you need to manage it properly. And obviously the sales will decrease if there is no supply into the market. If there is no proper supply, then the selling policy will be affected, and there may be failure in paying financial responsibilities which are arising in day-to-day operations, which are of short-term nature. Then there is a difficulty in quality control. The business opportunities cannot be utilized whenever the market conditions are in favor or the prices of inventory or the raw material are low. We cannot purchase them in bulk, or we cannot get the discount of purchasing in bulk because we are not having more amount of working capital. Then obviously the liquidity is affected, we are compromising with the liquidity of the firm, and this creates liquidity risk, solvency, short term solvency risk for the firm. And due to this, the goodwill or credit worthiness of the firm can be harmed, because here the prestige can be reduced if the company is not able to pay to its short term liabilities, short term obligations. And the growth of business due to this working capital can be stagnated. So this is all about disadvantages of inadequate working capital.